Welcome back, Pip Warriors, to Rocky Channel. Today we are going to talk about a special strategy inspired by the $153M legend Takashi Kotegawa and how to master it for XAUUSD. I reiterate, we only look for strong buying and selling zones. The current price is most influenced by the nearest buying-selling zone. So these selling zones way up high like this are unlikely to affect the current price. This red zone above is the range where sellers broke down the rectangle pattern. It also passed through many bottoms, so naturally, it's a strong selling zone. I will zoom in on the chart at the most recent stage. Based on the theory of reading market structure, at this peak there is a strong selling force pushing the price down, so this is also a strong selling zone. Besides, there is a weak selling zone. A selling force pushing down very short like this can be ignored, because if the price increases, it's very easy to break through weak resistance zones. Below there is only one bottom. I can draw a buying zone right away. The important question raised is this a strong buying zone or a potential buying zone to look for a buy order? If we only observe the chart without any support, I wouldn't be able to know until the price creates an uptrend structure like this. But if you project down to the volume, you will see consecutive divergence phenomena appearing. For those who are not fluent in volume divergence, you can refer to my previous video specialized in practical volume. The price increases very slightly, but the volume increases massively, ringing the alarm bell signaling the price is forming a bottom and reversing from down to up. And the theory of a strong buying-selling zone is where strong buying-selling activities occur, meaning large volume. Therefore, this green zone can be considered a strong buying zone, combined with Takashi's stock selection criteria for buying. I turn on the MA25 moving average, measure the distance from the bottom to the MA25 line. It's approximately 28%, falling within the 20 to 35% range. From that, it can be concluded, this green buying zone is exactly a strong buying zone, or what I often call a potential buying zone, to look for a buy order. I will wait for the price to pull back to that zone to look to buy. The price pulled back to the potential buying zone and bounced up with 3 green candles. Specifically for XAUUSD, I see many of you buy immediately at the last green candle. Entering an order immediately right here is not safe. You guys are like trying to block the wave rather than riding the wave. Reasons: 1. The major trend is a very long downtrend. 2. Most easily seen is the price is still below the MA25 line. 3. Observe the momentum force. If you want to buy, the prior selling force must weaken, meaning buyers gain the upper hand. Observing just before that, the selling force was still very strong, shown through the downward slope and through those red candles without wicks. To be safe, we should still observe the price moving further, waiting for more signals supporting a buy order. Pay attention to observe the overall movement of this entire phase. The price moves in a gradually compressing direction. Then the buyers break up with a long body green candle without an upper wick, meaning there is no resistance, confirming the buyers are dominating. So can we enter a buy order right away? Once again, volume comes into play, projecting the price candle down to the volume. We have 2 times of candle divergence. The candle body is very small, but the volume is very large, showing very strong defensive capability of the buyers at the potential buying zone, simultaneously signaling the price tends to continue to rise. In addition, we have a multi-candle divergence phenomenon. The price continuously rises, but the volume continuously falls, confirming the market's reversal signal from a downtrend to an uptrend. Reading candles in the current stage. If the small candles show the struggle between the 2 sides, the green candle breaking up belongs to a strong buying signal, engulfing the small candles before it. Yet another signal confirming the buyer's victory. Even easier to see, the last green candle is currently sitting above the MA25 line. There are many supporting signals, and also signals confirming the buyers are prevailing like that. I can absolutely enter an order right at this final green candle. Safe stop loss below the bottom of the green candle, because here the volume is very strong. Even if the price backtests, it's hard to break through. Takashi's important note on the take profit point. 1. If the previous major market trend was a downtrend, when buying, you should take profit early. 2. If the previous major market trend was an uptrend, then pulled back to a strong buying zone to look to buy. In this case, the take profit point can be set higher. For example, the CMG stock chart is case 1. The previous major trend was a downtrend. Therefore, I need to set the take profit point earlier than the first red strong selling zone. Here I set the risk-reward ratio to 1.3 to cover exchange fees. So the price has risen to hit the take profit point. Don't rush to leave, the good part is still ahead. So what if in case you accidentally set the take profit point too high, the price reverses before hitting the take profit point? What to do? Then just continue to hold the profit. To be safe, you move the stop loss one by one below the new bottoms. Here a special candle case appears. The last green candle has a very long body. Projecting down, the volume also spikes very long. This is a positive market sign. A lot of cash flow poured in, leading to a sharp price increase. You should not take profit at the first strong selling zone anymore, but hold the profit up to the strong selling zone above. This is exactly how Takashi holds positions based on market sentiment. After watching this final step, surely some of you will have a question. How this method applies to XAUUSD in real trading? My answer is, it is absolutely applicable. But the hardest part is determining the distance between price and the MA25 line, because gold has very strong volatility with sharp two-way swings, so we definitely cannot rigidly apply the 20 to 35% figures from the stock market. This requires sensitivity and observation experience. The final part is the capital management method. Takashi revealed he always follows the 1% rule. The exact words he said in an interview on Japanese television were, "No matter how confident I am, I never use more than 1% of my assets for a single trade." He believes that losing money slowly is better than blowing the account quickly, and only when preserving your capital can you survive long enough to meet the next lucky opportunity. Ending the lesson, please allow me to share a little hardship with you guys. The CMG stock chart in today's video is a difficult example, including a lot of knowledge from Takashi's stock finding method to the theory of reading market structure, identifying buying, selling zones, volume, momentum, candle reading. All of these foundational knowledge systems have been thoroughly guided by me in previous videos, with the desire that even beginners can understand the basics and apply them in practice. So, I hope that all my videos will always be supported by you guys, by subscribing to the channel, liking and commenting below. Oh, I usually trade in trading room, come and trade with me.